Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video we are going to dive in and take a look at an industrial company with a dividend growth of 30% per year the last 20 years. This company has been rewarding investors for at least 31 years without a reduction. The company has also increased its dividends for 24 consecutive years. It looks reasonably valued, a long history of steady revenue, earnings, and dividend growth. It is a company that might be a buy right now, so definitely check out this video and see for yourself. As always, please remember that all of this is not financial advice. This is just me sharing. Also, do me a favor and hit that like button, hit that subscribe button if you haven't done so. With all of that said, let's take a look and see if there is a place in your dividend portfolio for this kind of company. So the company I'm talking about is Fastenal. The ticker symbol is FAST. This is a company that it is a wholesale distributor of industrial and construction supplies. So if you go to their website, you can see they pretty much have a lot of products that many companies use. Definitely, I think it's a pretty solid company. I use some of their gloves for protection. Now, if you look at in the investment section of their website, you could see that if you were to have invested on this company 10 years ago, and ended about July 11th, you would have had a total return of 242% with a compound annual growth rate of 16%, and your ending investment would have been $34,241 in 8 years. So pretty good amount. Definitely something for you to consider out, but always remember, do your own research. Let's go swing now to Simply Safe Dividend. Based on their dividend safety score, you can see they rated as 81, which is very safe. The dividend yield is 2.37. It is a large cap. Now, looking at the key metrics, you can see payout ratio is about 66, which is a little bit high for most companies. You got your payout ratio of 69. During the recession, they've increased their dividend, and you can see right here, dividend streak of 31 years without a reduction. Now, looking at the dividend growth, you can see the last 20 years, 30%, which is pretty amazing in my opinion. Last 5 years, about 14%, and then the latest is 13%. I always like to see that upward trend, as you can see here. But one of the things I really like about this is dividend streak of 31 years without a reduction, 24 years consecutive increases. And then if you're wondering when you're going to get paid, if you do decide on investing in this company, you will get paid quarterly in the months of March, May, August, and November, and your annual payout is about $1.40 per share, which comes out, if you look at the chart, you can see about 35 cents per share. Ex-dividend date is April 26, which has passed, and then your payout would be 25. It is, again, reasonably valued. You can see the dividend yield is right here. Forward PE ratio is there. PE ratio would be 29. In terms of the industrials, it's 18, and then you got your payout ratio, free cash flow right here, and then earnings per share. As you can see, it's been increasing. Free cash flow per year per share, earnings per growth, sales growth, and then the total sales, outstanding sales right here, pretty steady. You can see right here, and then return on investment capital has been good, and then return on equity is right there. Now, if we swing over to Seeking Alpha, you can see based on their summary, 10 years, if you would have invested in 10 years, you would have been up 152%. And then if you got your 5-year one, would have been up 106. Now, if we look at the rating, you can see right here, some of them are hold. If we go a little bit further, dividend grades, you can see right here. The dividend summary, as you can see, 2.38 dividend yield, and then your 5-year growth of 13%, dividend growth of 24 years. And then you can see here the dividend grades, pretty solid in my opinion. Now if we swing over to NASDAQ, looking at the dividend history, you can see right here that pretty solid for the past couple of years. You know, you'll get, if you look at the dates here, you get it towards the ending. It looks like it is always on the end, and you get all that stuff in there. Now if we swing over to Motley Fool, Ruben Brewer in July 7, 2023 wrote this article. Here's why Fastenal is a non-brainer dividend growth. You can see some of the key components. Long history of steady earnings, dividend growth. Company makes fasteners that will survive vital to its customers. And then you got the stuff. So I think this is, in my opinion, a solid company. Definitely read this article. You can see some of the important things like the revenue, EPS, and then they talked about the strong foundation, have a good balance sheet, and so on. And then now let's go quickly to Barchart. Based on their technical opinion, they rated a strong buy of 80%. And then you can see right here, currently they feel like it's also a hold. 3 strong buys, 7 holds, and 2 strong sell. Looking at the performance, you can see the last 52 weeks up 9%, which is 21%. 3 months up 8%, and then the latest is only up 1%. Now you want to focus on the key turning points. You can see the resistance and the support level. If you decide on entering, definitely pay attention to these stuff. And then you can see right here, based on the chart, this is the 9 months one. The red is the 20 moving average, the blue is the 50, and then the black is the 200. It has been a sell-off yesterday. As you can see from here, it passed the 21. And then if you look over here, you can see the volume has increased towards the sell-off. The MACD is about to cross over, so it might go down a little bit more. Wait to see. As you can see right here, the results passed, so it might go further down depending on how it opens tomorrow. If it goes down here a little bit more, it might go as far as maybe over here, about 55. Right here you can see about 55 and stuff, but definitely go check it out and see where would be a good spot. Tip ranks, you can see based on their smart score, they rated as 7. Hedge funds have increased their shares. Insider transactions have sold their shares. And then you can see right here, 5-year based on their analysis of 142. If we go over here now, based on their analysis, they rated it as a downside of 4%. They feel it's a moderate sell, 2 sells, 3 holds. And then your 12-month forecast rated as a high of 60, 54 is the average, and low is 46. Now if we go over to CNN Business, you can see a high also of 61, a medium 56, and a low of 46. And then their recommendation is 3 buys, 8 holds. Now looking over to Alpha Spread, you can see balance sheet, 4 billion assets, and then you got liabilities, and then you can see also the fundamentals. Revenue, you can see, if you just look at the chart, has been increasing. Operational income, the net income, and then the free cash flow. You can see it's a little dip here, but now it's going up. Operating cash flow is also that. And then you got your efficiency, gross margins, net margins, ROIC, ROCE, ROA, and then 35 ROE. That's about it, guys. My opinion on this, I think it's a solid company. If you're looking for a industrial one that you want to invest on, definitely check this out. But also make sure you do your research. As always, please remember, stay cool, keep investing, and do me a favor and check out the other videos as well. Thank you so much for watching, guys. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.